Hey, what's going on, guys? Trevor here. So in today's video, I'm super excited to share with you guys a goal that I set for myself at the beginning of 2020 that I've actually hit here in the past couple of days. And that is to have $200,000 into the stock market in combination with, or combined with, all my brokerages that I have. So in today's video, I want to go through that with you guys. I want to take a look at my Robinhood portfolio as well as my Vanguard portfolio. Now, understand that I am not a financial advisor or expert. I'm just some average dude that loves to invest into the stock market and talk anything money related. So understand that, guys. You're not going to find me on Wall Street, and there's a lot of people on YouTube that know a lot more than I do. But I do want to be as transparent and share with you guys everything that I've learned and share with you guys my journey throughout investing in the stock market. So understand that throughout watching this video. We're going to be running through both accounts, Robinhood account. We're going to be running through my Vanguard as well. I'm not going to take time to break down each stock that I own. I've done that in the past couple videos, and it just drags out to like 45 minutes long. So I'm just going to share with you guys my cost basis, how many shares I have in each stock, and we're just going to go through one by one. I have an options contract. I also have individual stocks as well as an index fund that I want to share with you guys. So with that being said, guys, if you guys are new here, we take a look at the past month's gains or losses, the past 3 months, the past year, and the all-time as far as the balance here on the Robinhood account. So I do this every single month for you guys. I hope you guys enjoy it. And also, I do have to tell you that this is my second time recording this video. I just finished recording this about 10 minutes ago, and I realized that the audio was not turned on. I did not hit record. So it sucks. I have to redo it again. No problem. Please hit the like button, though, just because I am doing this a second time. It would really help out my channel and would mean a lot. So I hope you guys get a ton of value from this, and let's get right into it. So the past month's gain or losses, guys, we are up $22,211, just under 16%. Every time I share this with you guys, that does not mean that that is profit, right? That just means currently, as of recording this video, we are up $22,211 in the past month. That could go down. That could go down drastically, within the next month, right? So over the past 3 months here, we are up $54,749. So 50%, just under 51% there. The past year, we are up $103,512.75, so 175% there. And over the past, all time actually, $111,180.68. So obviously, guys, I'm very, very happy with the overall performance of this Robinhood account here. I couldn't really ask for anything better. So with that being said, understand that varies, right? It doesn't mean it's always going to stay that high. It can go much lower than that. But right now, I'm very happy that we just crossed that $200,000 mark because we've gotten insane gains over the past year especially. So we're going to start here on the right-hand side looking at the option contract that I made back in May. So this is for Spotify. Now, I'm not going to get too much into detail with this here, but my total return is $4,700. So just under 107% total return on Spotify. And this particular option expires on January 21st, 2022. So I bought Spotify, I bought a call option in Spotify right after the Joe Rogan acquisition. And I bought that around $185 or so. So looking at what Spotify is trading at right now, $257. And we zoom out here to a 1-year chart right around May 2020. So right around, I think here, so 185, somewhere around here is where I bought that contract right after they announced that they were signing Joe Rogan. And since then, guys, they've signed the Kardashians, they've signed DC Comics. I think I read recently that they're also signing something with Michelle Obama. So I love what this company is doing. I love the moves that they're making to constantly add value to their platform. I'm also a daily user of the Spotify platform. You guys know I buy companies that I'm a consumer of. So I'm definitely holding on to the Spotify call option for a very long time. You guys can see down here that it doesn't expire until 2022. It's 2020 right now, so I plan on holding it close to the expiration date. At least that's my intention right now. A lot of people ask me why I didn't just buy shares. It's because I don't really do options like at all. This is like I think the third option that I've ever done, and I just wanted to mix it up a little bit. And when I do options, I do it very, very long term. But I'm not the best at understanding options either. I really it's pretty confusing in my personal opinion. And a little bit more risky than just holding normal shares. So I tend to not do option trades that much, but when I do, it's for the very, very long term. So going back to my portfolio here, take a look at the stocks that I own in this account. So we have Apple. And those of you guys that watched my video before, watched my channel, know that this is a stock I'm not selling for a very, very long time. Right now I own 100 shares of Apple at an average cost of $191.84. This makes up about 26% of my overall total portfolio. And the total return here is $23,581.42 for just under 123%. So I probably don't have to go too in depth with Apple, guys, but right now we're trading at $427.65, up 10% on the day, actually, so that's pretty crazy. I have to admit something, that I did not listen to the conference call that was yesterday. Unfortunately, I was just so busy, I didn't even get to the Facebook conference call either. So after this video, after I film this YouTube video for a second time now, I will have to go look at the conference call. But I do know that they're doing a 4-to-1 stock split, which personally, I'm a big fan of them doing this stock split here. I believe it's a 4-to-1 stock split. So I believe it's sometime in August of 2020. I'm going to have to listen to the conference call again to get confirmation on there. But I look forward to them splitting the stock and making it more affordable for more investors, and I'll probably increase my Apple position, to be honest with you. So just love this company overall. I'm not going to go really talk about this one just because a lot of you guys are probably familiar with it, but it's a dividend beast for me as well. $82 every quarter right now that I get paid from Apple dividends, and super excited to keep holding this one, and very, very proud of my cost basis of $191. So nothing crazy there. I bought Apple 2018, end of 2018 when we had that correction. iPhone sales units were weak. There's a lot of panic around the stock. Figured it was really undervalued. The dividend payout ratio is extremely low. Solid company, very proven company. So I opened up a position in Apple, and I plan on continuing to add to it, especially if they split the stock. So not selling that one anytime soon. That's going to be my portfolio for probably every portfolio that I do every single month on this channel. Now, moving on to the next stock here, Tesla. You guys are probably very familiar with this one. Any finance channel, anybody on YouTube has talked about Tesla at least once, right? Whether they're for Tesla or whether they're against it, right? So right now in my portfolio, I have 50 shares, okay? So portfolio diversity down here makes 44% of my overall total portfolio at an average cost of $259.98 and a total return of $58,691. for a return of 451%. Obviously, that's insane, and I will be honest, that is a huge reason why my portfolio has done so well over the past, especially the past year. But I'm not really ashamed of that. I bought Tesla at $259 because, of all the reasons that I go into in the previous videos that I've made about this stock. But I'm very, very happy with the average cost, $259. A lot of people are asking me if I'm going to be selling Tesla anytime soon. With the gains that we have down here. Right now, it's great to see, but I'm not going to be selling Tesla, and I made a video on why I'm not selling Tesla that you can check out as well. But, great to see those kinds of gains, but I believe that this company is just getting started in what they're capable of doing. And, the stock price has just gone insane over the past, pretty much the past year, right? What is the past year overall? 300-something%? 490% in the past year. So, needless to say, that is a very massive increase in really any stock price, especially for Tesla. So I actually held 94 shares at one point in my Robinhood account, and I sold around $700, $800 or so. I sold most of those. Do I regret doing that? Well, obviously I kind of do now, but at the time, no, because I was so, I felt like I was so heavy in Tesla. And I wanted to diversify a little bit more. And you guys are going to see throughout going through my portfolio, I have a really odd portfolio. Like there's some stocks that are like 20%, 30% of my portfolio, and there's some stocks that are like 1% of my portfolio. And, that's just me being not a professional investor, right? Just an average dude that's trying to figure this out. Like a lot of you guys out here on YouTube, just trying to figure out how to build wealth in the stock market, learning from different people. So again, I'm no expert at anything, but I'm definitely going to be rebalancing my portfolio here in the near future. But, right now, Tesla makes about 44% of my overall total portfolio. And the main reason is the stock has just shot up so much, increasing my equity in the company, therefore increasing, the portfolio diversity. So not planning on selling this one at all, enjoying the ride that Tesla has had, and I believe that, especially if they get added into the S&P 500, guys, I believe that's going to be absolutely huge. And if they end up doing a stock split that they're going to talk about on September 22nd in the annual shareholder meeting, that's going to be huge as well. So holding this one, holding my 50 shares, I cut it down from 94 shares to 50, so I did take some profits to diversify. If I would have held onto those shares, man, I probably would have, I don't know. I don't really want to think about it. But right now, I'm happy with Tesla and where it's at. So Next stock on the list here is going to be Disney. And Disney was actually a recent acquisition that I made within the past couple weeks. And right now we have an average cost of $118.14. And right now I hold 15 shares total, and this makes up just 1% of my overall total portfolio. And let's see, I have a total return of $26.08, or negative $26.08. So down just a percent there. Now, this is important to know, guys, because when I initially buy stocks, I don't just go buy $20,000 worth of stocks. Okay, I go and I buy an initial position. So, for me personally, you can see here that my initial investment was just about $2,000, and I also added another stock that we'll go over here in a minute, and my initial investment was just under $2,000. I do that, guys, because I don't believe that I'm finding the bottom. I don't believe that I'm going to be building out this stock within this week, right? I like to just start initial positions. And if the stock ends up, falling drastically because of, various reasons, and I look into it a little bit more, and I think that the company's undervalued or I should be adding more shares, then I'll go in and add more shares because I have more capital to do so. If I just come in and buy Disney, I buy all, let's say I want to build out $10,000 in Disney stock, and I just do it all at once, it doesn't give me an opportunity to lower cost basis if I don't have access to that capital. So, that's just the way that I personally invest, and I've studied a lot of people that do the same thing. They don't initially go out and buy all their shares at one time and then hope it goes up. It's a continuous process of building up those positions. And the only reason I know that is because that's what I did with Apple and Tesla. When I initially bought Apple and Tesla, I bought the stock price up here, and then all these, events happened that brought the stock price down to here. Luckily, I had capital. I don't even know what I'm doing with my hands over here, but luckily, I had capital over here that I was able to lower cost basis on these shares. So I was able to build out a lot of, shares in those stocks because I had extra capital, because I didn't buy all my shares at once with Apple and Tesla. I don't know if that made any sense, but basically what I'm trying to say here is I never try to time the market, and I'm just going to be adding and lowering cost basis if the stock falls. And if it doesn't, I'll still make some gains, and great, I can maybe sell out or just hold on. But I plan on holding Disney for the long term. It's a stock that I really think, it reminds me of like Apple almost, where it's not like with Disney you just get one aspect of the business, right? You don't just get like iPhones with Apple. You get a ton of other products. With Disney, you don't just get Disneyland, right? You get a ton of other Disney products, Disney Plus, right? All these different aspects of the business that I'm personally a fan of that I don't think are going to go away anytime soon. Again, I'm not going to dig into financials or anything here, but I plan on holding on to Disney for a very, very long time. So next stock here is going to be Wynn. Now with Wynn, trades currently at $72.53. Average cost here of $71.71, and this makes up 4% of my overall total portfolio. And I have 100 shares currently of this company. And right now I'm up $81.62, so just over a percent. So with Wynn's a stock that I actually owned back in, I believe, late 2018, and I sold in late 2019, and I made great profit on this stock. And then when the pandemic happened, it fell pretty drastically, right? So that's when I started initially buying more Wynn stock, and I have an average cost of around $71 or so, and I've been adding more shares throughout this pandemic. Now, this is a stock that I'm definitely interested in buying more and lowering cost basis, but I'd probably do it if it fell around, $60 or so. It'd have to fall drastically below my cost basis for me to add more. But I'll tell you what, guys, I was in Vegas this past week, and it wasn't crowded, but it wasn't empty. Okay, it's nowhere near the pre-pandemic numbers that we had, but it was definitely interesting to go to one of my properties that I hold as an investment, and just check out the general atmosphere, right? Was there anybody there? Was Vegas completely empty, right? And again, it wasn't anywhere near where it was pre-pandemic, but we're starting to see, I think, a little bit more people coming out and still practicing social distancing, still doing all the masks, still making sure that we're listening to all the requirements that we have in place now. But it was good to see that they're taking steps to become back to somewhat normal capacity, right? They're nowhere near that, but it was definitely cool to see that it wasn't a ghost town in Vegas, right? It wasn't a ghost town on the Strip. There was just a lot less capacity. So with Wynn, plan on probably buying more if I fall below cost basis, but right now not rushing out to go buy more Wynn stock here today. So the next stock on the list here is going to be Facebook. And like I already mentioned to you guys, I admit that I have not listened to Facebook's conference call. It is up over 8% today, and I can't tell you why at the moment because I have not listened to the conference call. So with Facebook, right now I have an average cost of $156.99. I have 50 shares, and this makes up 7% or just under 8% of my overall total portfolio. And right now I am up $4,816 or 61% on my Facebook position. Facebook is another stock like Wynn that I bought a couple years back and recently sold at the end of 2019 for a great profit. And then once the pandemic hit and I saw Facebook fell back down to like $150 or so, I decided to buy back an initial position and start in a position. Now, this stock, I actually built out a position in probably like a week, maybe a little bit less than a week. I told you guys originally that I usually do like maybe $2,000, $5,000 increments when I start buying. Facebook, I had an experience with Facebook before in 2018. Let's scroll out here. So 2018, we fell to like $130, I believe. And then we started to see the stock price move in a positive direction. When I sold around the end of 2019, I believe it was somewhere around here, around the $200 or so range. And then we fell back to $150 or so. And I said, you know what? I feel like I want to go buy more Facebook right now. And again, I'm not going to share everything of why I was buying Facebook. I've made videos on that in the past, but I think I bought all my 50 shares within a week. So since then, we've done really, really well, right? Total return has been $4,816, and I bought all these shares in March. Now, I got lucky here, okay? I didn't time the market. I didn't know where the bottom was. I just felt that anytime Facebook falls around these levels, it usually just, goes right back up. And that's not me doing TA or anything. That's just me, remembering of where Facebook has been, right? It tends to fall drastically and then kind of pick itself back up and kind of have those cycles. So, again, not a technical analysis guy at all, but I believe Facebook is just, it was undervalued at that time. And I believe that they're going to continue to do what they do best and be a dominant player in the social media space. So, very happy with my average cost of $156.99. I don't plan on selling Facebook anytime soon. I also don't plan on adding Facebook anytime soon just because it's so over my cost basis. I would like to hold more cash and look for some more opportunities. But definitely a great buy, in my opinion, to buy Facebook at this time. And I'm just going to continue to hold that one. So next stock on the list here is going to be LTC Properties. So this is the one that I was telling you guys about. That is a new acquisition that I started an initial position of. So just under $2,000 I have put into the stock, I believe about a week ago, and I own 50 shares, and it makes up just under 1% of my overall total portfolio. My average cost is $37.53, and my total return right now is negative $18.92, so down just a percent. Now with LTC Properties, I'll just give you guys a brief overview down here. I'm also getting a dividend here. It's a monthly dividend REIT, and I'm getting a dividend here of $9.50 right now. If I just hold those 50 shares, I'll be getting that every single month for owning the 50 shares. So LTC Properties is a real estate investment trust which engages in managing senior housing and healthcare properties. So they're really involved in the senior housing and healthcare, which is why I decided to buy this stock based on, what's going on around the world right now with the pandemic. You guys know that watch this channel, I buy typically growth stocks. I'm pretty all over the place whenever I buy stocks, right? But I like to buy growth stocks. Lately I've been buying unprofitable companies. I've always wanted a monthly dividend REIT in my portfolio. However, I'm not a huge fan of monthly dividend stocks or dividend stocks in general, right? And I'll get into that more in a video that's going to be coming out later this week. But typically, I don't really care too much about the dividends. I'm more concerned with, the growth potential for the stock. So generally what I look for, but I decided to buy a REIT here the past couple weeks, and it's a monthly dividend REIT. So this company pays me every single month based on how many shares I own, which is 50 shares, an average cost of $37.53. So I'm getting $9.50 every single month just for holding this stock. But I also believe that this stock has some growth potential as well. We can see here, if we zoom up to the 5-year chart, this stock has been hit pretty hard within the past 5 years. But obviously, looking at the past 5 years of this company here, down 14%, it's not a very good looking chart, but I went over in the previous video why I think that this company has the potential to increase in value and why I think this company is going to continue to pay their dividends and possibly increase their dividends here in the near future. So started an initial position in LTC Properties, again, just under $2,000 like I did with Disney. I will lower cost basis if we fall much below my cost basis here. But it's a stock that I'm not too concerned with the growth necessarily. I really bought it for the monthly dividend because I don't really have any dividend paying stocks other than Apple, right? So that is one stock there, LTC Properties. Next stock on the list here is going to be Uber. Uber right now, I have an average cost of $30.08, and I have 250 shares, and this makes up 4.67% of my overall total portfolio. and we are up $80.08. So this is hovering just around my cost basis, about 32 cents difference, right? So Uber's a stock that's absolutely getting hammered based from the pandemic, and we can see the past year they're down 28%. And I'll tell you what, guys, just from personal experience, going to Vegas, like I just said, within the past week, I mean, there were people on the strip. It was like, it wasn't crowded, but there was people there. But there were like no Ubers, right? From what I saw personally, like normally there's just a ton of Ubers lined up at the hotel, and the strip is just bumper to bumper, really, really crowded. It wasn't really crowded on the strip. Driving through was no problem, and that's because a lot of people are not traveling in Ubers. So obviously the business has been hit dramatically from the pandemic, and it's going to take a while before this company gets to the pre-pandemic levels that they were at before. But their Eats business is still killing it, I believe. I also believe that they acquired Grubhub. I'm not 100% sure. I think I remember reading that. I got to do more research into Uber. It's been a while since I've actually kept up with Uber stock. I've done a really bad job of reading up on the news with Uber because I just try to stay away from the news in general. So I definitely have to spend more time keeping up to date with Uber. But right now, if you were to ask me if I'm going to be buying or selling my shares, I'm going to be holding my shares. And I don't plan on buying any more. Uber would have to fall drastically below my cost basis as well. And the only reason is, guys, is because I'm pretty happy with, the 250 shares that I have right now. I think that's a good amount for my total portfolio in Uber, and that's just where I'm comfortable at. That is my Uber position there, up $80 at the moment. And the last stock in this portfolio here is going to be CCL. So Carnival Cruise Line, you guys are probably really familiar with this one. I have an average cost of $19.58. I have 120 shares, and the total portfolio diversity is just about 1% of my overall total portfolio. Now, I'm actually down a lot on this one. I'm down $683.65, so down just about 30%. Now, this is a stock that you guys can see, just 1% of my overall total portfolio. Average cost $19.58. Right now, Carnival's at $13.88. Pretty volatile stock, too. I get notifications all the time that this stock's up or down 5%. It seems like almost every day. Now, why didn't I make this position into a massive position, or why am I not adding more right now? I might add more Carnival, honestly. I might. But my thought process behind buying Carnival Cruise Line was never to make this into a big position in my overall total portfolio. This was purely a spec play. And the whole reason I bought this stock was because, hey, I love going on cruises. I love Carnival. That's the company that whenever I go on a cruise, I use Carnival. And I was just thinking, you know what? I'm going to buy Carnival stock at this time. This was around March or so. And, hopefully within a year or two, I'll be able to take that money out and I'll be able to go on a cruise. That was literally why I bought the stock. I tell you guys all the time that I invest money and I put money in my brokerage. And, if I have any gains in the stock market and I take it out, I just recycle it within my portfolio. I don't take it out. And this is the exception, I guess, because with Carnival, I was just going to take the money out and, pay my taxes on the gains and go on a cruise. Okay, so that pretty much wraps up my Robinhood portfolio there. So now I want to jump into my Vanguard portfolio, which really houses my retirement accounts. So I got two main accounts that I have within my Vanguard portfolio here. So going down to the first stock in my Vanguard portfolio, I have SPCE, which is Virgin Galactic. So I've talked about this stock a ton on this channel, and I'll probably make some more videos on it in the near future, but I have 100 shares of Virgin Galactic, current balance of $2,245, a stock that I plan on continuing to add for the super long term. Now, a lot of people are asking, hey, why didn't you put Virgin Galactic in your Robinhood portfolio since you have mostly individual stocks in that portfolio? And honestly, I bought Virgin Galactic in my retirement accounts because that's how long I plan on holding this stock. Just because I personally believe that what this company is going to be doing is going to take a long time to accomplish, and I'm just planning on holding this stock for a super, super long term. I don't really want to look at it every day when I log on to my portfolio. It's just a buy, kind of hold and forget about this stock, and I have an initial position of 100 shares, and I don't really log into my retirement accounts. I check it probably twice a month. But I don't really look at this account in particular. I just want to throw Virgin Galactic in this one just because it'll be such a long time before even thinking about selling the stock. I just put it in my retirement account. Next stock on the list here in my retirement account is Tesla. So I have two shares right now, $2,861. I threw that in this retirement account because why not? Back in May of 2019, around $200 or so, I threw in two shares of Tesla just for fun as well. Now, VTSAX is mainly what my retirement accounts consist of, this index fund here. So it's a Vanguard Total Stock Market Index. So I have about 90 shares here, current balance of $7,322. I'm a big fan of holding index funds, actually. So I hold individual stocks in my Robinhood account, right? And I try to beat the market in that account. I also like the idea of just buying the index fund, tracking the overall market. And in a retirement account, I'm not trying to beat the market. I'm just buying the overall market and holding it for, the super long term. So I'd like to hold mainly index funds and ETFs in my retirement accounts. Right now, it's just VTSAX. But I'm hoping to add more in the near future. I'm also looking to add SPHD. I believe that's the ticker symbol, the monthly dividend ETF. I'm probably going to be adding that into my retirement accounts here pretty soon. So going down to my retirement account now with my Roth IRA. Roth IRA, we see Tesla here again with 2 shares. Now, this wasn't really planned. I was having some trouble with Vanguard, so I contacted the support back in May of 2019 again. And he's like, hey, is there anything else I can do for you? And I was like, you know what? Throw in 2 shares of Tesla in my Roth IRA for me, just because, And I'm happy I did that. Obviously, it's in my Roth IRA. I'm not going to be accessing that for I don't even know how many years. I'm not going to try and do math on here. But a lot of years before I retire, before I access this account. But happy I have those 2 shares of Tesla in there. Current balance $2,861. And then moving down here, what my Roth IRA mainly consists of is VTSAX, which is 184 shares there. Current balance of $14,858. So I opened up this Roth IRA about 2 years ago, and consistently $500 every single month goes into VTSAX into my retirement account. So again, I try to max out my retirement accounts every single year. It's going to come out to $5,000 or $6,000 right now in 2020. But basically just going to be buying more ETFs in my retirement accounts. And when I'm not doing that, when I'm not adding to my retirement accounts, I'm not adding to my my Robinhood portfolio, I am either, holding more cash, increasing my cash reserves, or maybe going out and living life and kind of spending a little bit of money. Who knows, So those are my 2 main accounts there, guys. My Vanguard portfolio and my Robinhood portfolio. Remember, it varies, right? Some days we're up $7,000, some days we're down $7,000, but we're right around that $200,000 mark. It just depends on, the day and the gains that we have in the stock market or the losses. But huge goal for me that I wanted to share with you guys today. I'm very, very happy that I hit that amount. Again, it can go down drastically. I'm not saying it's going to always stay up there, but I'm definitely going to celebrate the goal that I have accomplished here and share that with you guys. Because again, I'm just going to be as transparent as I can on this channel and share with you guys everything that I've learned and continue to learn investing in the stock market. So I hope this video wasn't too long. I hope you guys got a ton of value from it. If you ended up watching the entire thing, thank you so much for taking the time to watch this video. I really hope you got some value out of me sharing all my investments with you guys. I really admired YouTubers that I watch when they share their investments, just so I can get their thought process behind their investments and kind of where their mind was at while purchasing their investments and look at it from their perspective. So I hope you can do that with my videos here. If you guys got any value, please consider subscribing to the channel. Please hitting that like button. This is the second time that I've done this video today, so I'm pretty tired. So thank you guys so much for doing that, and I'll see you guys on the next video.